If you have a low credit score, you could be throwing away thousands of dollars every year in loan interest and insurance premiums. That's because lenders and insurers, they see low scores as higher risk, so they charge you more.
They're evil. But you don't have to be locked into a low score forever. Consumer reporter Josh Sidorowicz is in your corner with steps to break the cycle.
It's not a good place to be in.
No.
At all. We know, right, that having a lower score can cost you a lot of extra money, actually. But now a new study is revealing just how much more. Pretty staggering. The good news is you can build your score back up sometimes in as little as just a few months.
Let's try sounding it out.
Whether it's for the start of second grade or for her own postdoctorate, Patrice Hubert has spent a lot of time on homework. But she says one of the toughest lessons was learning how to dig out from under more than $35,000 in credit card debt.
I've been dealing with credit card debt for a while, since before I started my PhD. And then when I got into it, my income dropped, so I had to be more on a budget. Then I became a mom during my PhD, and it was just like a spiral.
At her lowest last year, this West Philly mom says she maxed out her cards, couldn't make the minimum payments, and watched her credit score crater.
It tanked. I'm pretty sure it fell probably 100 points. And then all the other cards were maxed out, so that added to it.
With it, she says she faced ballooning interest rates on potential loans.
You feel trapped.
A new Bankrate study is revealing the true cost of low credit scores, finding subprime borrowers, those with a score of 620 or lower, on average pay $3,400 more each year for loans and insurance than those with higher scores, potentially adding up to more than $100,000 over a lifetime.
Lenders would say, well, it's fair that we charge people more when they have a lower credit score because they're less likely to pay us back. But it shows from a consumer standpoint how it's really important to bump up your score.
Bankrate senior industry analyst Ted Rossman says the good news is that there are plenty of ways you can bump yours up, sometimes in as little as a few months. Of course, the best place to start is to commit to making on-time payments and to avoid opening any new accounts. But beyond that, he says, consider becoming an authorized user of a parent or spouse's credit card. That way, their good credit history can translate to you. You can also sign up for a service like Experian Boost or Credible, which lets you add your on-time payment history of certain household bills to your credit file.
I'm in a good place, but I could be even a better place.
Hubert says she stopped spending on her cards and enrolled with a nonprofit credit counseling agency, which lowered her interest rate and set her up on a repayment plan. A hard lesson, but one she hopes her daughter will be able to learn from in the future.
I think we should open up for having problems.
Bankrate also suggests you check your credit report regularly, and that's because the FTC data shows that about 1 in 5 Americans have errors on their reports, and that can also drag your score down significantly.
I had an error on mine.
You've dealt with yours. Yeah,
what
did they say?
My parents' mortgage.
Yeah, the mortgage.
They said I applied at 5 years old. I'm like, what is this?
You know what, though? I wouldn't put that past you, Jim.
I know. I was very smart and savvy at that age.
But it's so important. Yeah, you got to check that because that'll bring it down, and then you got to break that cycle because once you're in it, it's hard to get out. Yeah.
Thank you, Josh.
Yes.
By the way, you can contact Josh in 2 ways. You can fill out our consumer complaint form by scanning that fancy QR code on the screen or by going to cbsphiladelphia.com/inyourcorner.